Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. Nothing new that can be said about today's action. The action was similar to what we've seen earlier this week: steady consolidation in mid-cap stocks and selective outperformance in large-cap stocks. Even though Nifty has closed off from the day's high, it has closed in the green. In terms of action, in terms of momentum, in terms of direction, the action was slow and steady, and the market breadth was strong and positive. The only group that was notably weak was the entire metal space, and key large and mid-cap metal stocks are now under pressure. So what is the way forward for Indian markets in the run-up to the budget? Which are some of the key individual stocks one should focus on? We'll discuss that and much more for you in this edition of Markets Tomorrow. The show lineup today includes Punita Kumar Sinha, Managing Partner with Pacific Paradigm Advisors, Dipin Mehta, Member BSc and NSE, and Sandeep Wagle, Founder and Managing Director of Aptat Technical Advisory. Thank you all for joining us. Let me kickstart the discussion with you, Sandeep Wagle. We've seen some repair work in mid-cap stocks and some stability in large-cap stocks. What's the way forward for Indian markets? And do you think we are in some kind of a pre-budget rally mode now?
Nikunj, I would say that we have made a bottom. We have made a temporary bottom. And though we may not rally much, but yes, 6,020, 6,030, which is, I would talk of a 50, 70 point upside, is very much on the cards. And today, though the market opened up with a gap and came down and closed at the lowest point of the day, I would not consider this as a weakness where one should sell and get out. I don't see that weakness. At lower levels, buying will come in, and it will be more stock specific. And we are, yes, pre-budget limited rally is what I would say. I don't see a rally till 6.1 or 6.150, which we had a view initially. 30, 40, 50 points on the upside is what I think, and on the lower side, 5,900 will not be broken. So 5,900 to 6,000, this is the range till the budget.
Dipin, what is your understanding? Do you think the storm has come and gone, or there is still some more sting left in the system?
Yeah, I think we are looking at the budget session starting, and that could be fresh flow of news for the market. So this tight movement which we have seen in the indices and the broader market, I think that could get broken on either side. But my sense is that all eyes on the budget, and maybe a big move could be expected on the budget day itself or thereafter. Although not much is expected by the street from the budget, still it has its own charm, and generally the analysts are looking forward to how the FM is actually going to balance the budget and what the fiscal deficit number could be. And also I think global markets also seem to have kind of quietened down and are not causing much of an impact on our markets. So all things put together, I think we are trading in this narrow band, and maybe if we have something interesting coming out of the budget, then you could see this particular trading range being broken.
Punita, to your mind, what explains the passiveness in Indian equities? Indian equities are extremely range-bound. At least benchmark indices are extremely range-bound in the run-up to the budget.
Well, it's quite, if you look at historically, typically Indian markets either, correct pre-budget or post-budget. And we are seeing some of the correction right now, but I wouldn't be so concerned, because I think the finance ministry is very keen to have very buoyant capital markets, because they have a very aggressive divestment target. They have to manage the fiscal deficit. So any correction right now is probably, hopefully, post-budget will sort of reverse. But of course, there is always a risk that the budget may disappoint, although my sense is that given the way the finance ministry and others in the government have been aggressively pushing ahead on reforms, that reform initiatives hopefully will continue to generally be, creating a feel-good factor.
Well, as a group, cement did see some short covering, and oil and gas, OMCs, and then Reliance Industries, they went up on, at least Reliance Industries went up on strong volumes. Reliance Industries 874, 26 rupees up. Dipin, at the current juncture, do you think Reliance is looking attractive because the stock has corrected enough? Globally, the petrochemical demand is looking strong, and one is hoping that this time around, government is very serious when it comes to some reform in the gas space.
See, I think the downside in the stocks are limited, given that the Q3 performance was quite impressive, and they did demonstrate that, in terms of refining margins, they could deliver. and also beat street expectations. So I think the downside is capped. But when it comes to the upside, a lot depends upon actually how the events unfold for the company and what exactly the decision as far as gas prices are concerned and how the output at the KG gas basin is going to actually move up. So I would say that, Reliance also, kind of spearheads this kind of sideways movement which we have seen. And I think that's likely to continue for some more time. And investors, are getting slightly warmed up to Reliance, but there are other very good ideas in the market as well, even amongst the large cap stocks. And maybe Reliance could at best be a market performer or a slight underperformer.
Bagle, cement, for the first time in many days, cement as a group has gone up and gone up on strong volumes. Do you think in the near term, cement stocks have turned the corner?
Yes, Nikunj, I do think so. In fact, over the last 3 days, the cement stocks have been moving. ACC has moved up from 1220 to 1310. Yesterday it was a buy for us. Today, at this point in time, I am seeing more strength in an Ambuja. At a current level of 200, 199, I see traction up to 205, 206. So for a limited trading upside of 3-4%, I would buy cement on every decline, specifically Ambuja at this level of maybe 197, 196, somewhere around, and talk of a target of 207 also.
Punita, I would like to draw your attention to financials. As a group, are you bullish on financials? What to your mind is the way forward for financials as a group, as a space?
Financials are in India. They have this. They sort of are a way to play their domestic consumption story. They also are a very good way to play the investment cycle picking up. So, which is why I think financials generally are, if the valuations are attractive, then financials is a good space still to be in, especially where we are in the rate cycle. Of course, financials. Last year, Indian financials are up like over 45% on average. So the valuation, I think, is not that attractive, but there are select financials that one will have to pick and choose from. But overall, as a sector, I think it still offers some opportunities.
Dipin, what are your thoughts on pharma as a group? Because the street clearly is divided on how to approach pharma stocks. The bulls are of the view that pharma stocks are growing, and the bears are of the view that pharma companies will not grow because base effect will kick in, and valuations are also looking slightly rich, stroke extended.
See, I don't think you can paint the entire pharma industry with one brush. There are at least 3 segments in the pharma industry. There are the large pharma companies which have got very good export business, generic business in the US and other developed markets, and all of those have come out with a very decent set of numbers. And we are seeing the US generic market really picking up with very good top line growth, and they're getting benefits of economies of scale, and the actual filings are increasing all the time, and on and off they do get the benefit of first to file in 1 or 2 instances coming through for a quarter or for the year. So that particular section of the pharma industry continues to chug along pretty well. The names being Wockhardt, Sun Pharma, Dr. Reddy's come to my mind. Then there are the second line pharma companies which are more focused on the domestic markets, and there could be some kind of issues coming up with the new pricing order, and also there we have seen some kind of volatility coming into the earnings, some kind of setback coming through either in domestic market or export market. But there I think the company's valuations are still at attractive levels. And then there are the contract manufacturers where the balance sheets are under a bit of stress, and capital, return on capital and return on capital employed ratios on the lower side. So per se, I think the first segment, that being the large pharma companies which are focused on the US generic market, that should be the preference for the investors. And all the valuations have moved up, but so are the performance over there. And what we have noticed is that over the past few quarters, some degree of consistency and visibility is coming through for these companies. So I would say that that's a sector that one would like to be overweight on.
Right. Fair point. Sandeep Bagle, what is the deal with DLF? Up more than 10% in the last 3 days. Do you think DLF is looking strong for another 5% from these levels at a time when the outlook for real estate is not strong? DLF today hit a new 52-week high.
Very honestly, Nikunj, I am surprised. I had a target of 275, 277, and we have talked of this over the last couple of weeks, maybe last couple of days, not couple of weeks, at 265 or so, 262, 265. But at this level, though it has broken a prior swing high, I am not very comfortable taking a fresh bet. I mean, I would advise booking of some profits because financials will not match. So in that sense, yes, this move has surprised everybody, but furthermore, I would not be that keen on getting at this price.
Depend KFA, worth a punt? If you're buying KFA now, you're pretty much buying the stock at the option value.
No, that's not the way to play the markets over here. I think that, Nikunj, there are lots of interesting ideas, and it's a good time to build a portfolio and good time to kind of get into good quality stocks. So why wouldn't dabble in something which is almost junk status?